Do you think they're going to be able to now keep their new streaming title with these kinds of higher costs? Is it that sticky?
Yeah, it's great to be here. And of course, Disney's move is a sense of relief. The sentiment was so negative for media and entertainment. These price increases are noted, and there still is significant churn in this industry for streaming. But I think the value creation of Disney's content management thinks they have room to raise rates. One of the most expensive is HBO Max, which is still above the ad-free Disney Plus new pricing plan.
Yeah, and if we could throw a longer-term 1 or 3 or 5 year chart up, and I don't want to throw any water on these numbers, they were good. The numbers were good. The market is reacting as such. But Disney was a $180 stock, what, 1 year ago? I mean, so it's at 120 or 121 right now. But let's be clear, this has been a tough stock story for investors.
So I think on the call last night from management and what we're hearing from media, they really have steered the narrative to really executing in their traditional businesses. The parks was a blowout quarter, and they gave visibility how they're going to manage the streaming business, but it lost $1 billion in this quarter, up from $280 million a year ago. So even if you're ratcheting down the total subscriber count, I think focus is going to be more on, can you move to reduce the losses and make this a franchise where you have predictable cash flow? And that's the narrative we go into next year, possibly with recession. So I think you're right, Brian, is the stock is traded down, doesn't pay a dividend, doesn't repurchase shares. Their CapEx went from 3.8 to 5 billion this year. They are reducing programming spending from 32 to 30 billion. But at the end of the day, it's about making money in media. And I think Disney did a good job to steer the narrative last night on the call.
Yeah, and if they raise streaming prices, Ken, and keep all their subscribers or continue to grow, they're going to make more money. But isn't the risk you raise prices, you lose a couple of % of your subscribers because inflation's just eating everything, and now you bring in the same revenue on a smaller base of customers? I mean, how do you see it playing out?
Yeah, so let's be clear here that not every subscriber is the same for Disney. You noted domestically the different plans, but about 40% of their total subs comes from India, Disney Plus, Hotstar. They're going to lose customers. That was up the most. Out of 14 million subs gained in the quarter, over 8 million was India, and they raised from a meager 76 cents to $1.20 a month. So it's maybe making 700 million a year going forward. So it's not going to be the subscriber counts that are going to matter as much as just getting some healthy revenue and EBITDA growth. It sounds kind of boring, but that's really the message we're hearing from the industry, particularly from other competitors.
Yeah. And ESPN, listen, I mean, I'm a college football fan. I don't tell anybody, Ken, but they could raise prices no matter what, and I'm going to have ESPN on my app and on my TV because I need that college football and some car racing on the side, Ken. Can we talk quickly about parks? There was a bank rate study out, or Courtney Reagan hit it earlier in the show, that people are beginning to trade down because inflation is just crushing their wallets. I love Disney. I grew up in the shadow of Disney for a brief period when I was a kid in Anaheim, California. But at some point, is there a breaking point for their park visitors as well? Because Disney ain't cheap.
So the parks did great, but it was on the trajectory still from the rear mirror of coming out of the pandemic. And it's likely that going forward, there will be greater risk, particularly for recession. The parks did great. They say they can open up the gates for more people as they feel comfortable getting out of COVID. But it's a very cyclical business, Brian. It's not one where you're going to mortgage the bank just to go to Disney Park. They had a great quarter. That's really what made the earnings beat this quarter, for sure.
Yeah, and Universal, as we all know, Ken, they have far better rides, but I might be a little bit biased. Bottom line, what do we do with the stock?
So I think the stock, we have it as a hold, and to your point that the stock is still down significantly from before. For shareholder return, it's all about, can they continue to drive profitability? Because shareholders are not getting buybacks or dividends from this stock.